So good morning, everyone. Welcome again to our second in the series of legal issues related to the reopening webinars. Today we have with us Johnson Kendall Johnson, law firm up in Pennsylvania, I believe, and we are happy to welcome Raphael Hachiski and Alexander Brett Schneider with JKJ, and they will provide lots of information for y'all today. Thank you.
Thanks, Paula. You can hear me okay still?
I sure can.
All right. Thank you, Paula. Appreciate you letting us do this. Just to be clear, we are an insurance brokerage, not a law firm. I was a lawyer before I became an insurance broker, so I probably do speak like I'm by the word and have a lot of hot air coming out of my mouth, is what my daughters tell me. So I'll do my best to keep this as concise and succinct as possible, but doing that with me will be Alexander Brett Schneider. So I'll let her say hello as well real quick.
Good morning, everybody. Thank you for having us today. I'm Alexandra Brett Schneider, and I'll be speaking to some of the cyber-related components of our discussion today as I lead our cyber practice at JKJ.
So thanks again to Paula and the rest of the team over at the, I guess, Artist, formerly known as VanHa, now Leading Age Virginia, for letting us do this reopening series. As we know, it's an if, not when kind of scenario with regards to reopening. So what we're really doing is preaching to our clients right now just to be ready at the very least on reopening. And from our perspective, obviously we're handling the insurance and risk management aspects for our clients. It's just a tough market right now. And I know I did a webinar a couple months ago for Leading Age Virginia just about the post-COVID impact on the insurance marketplace. And to put it succinctly, it's a hard market that we're in right now. And so we're going to go into some of the stuff about the just insurance renewal tips and tricks, things that we're hearing out in the marketplace, as well as just some hot ticket items that have been popping up in our discussions with our provider clients all around the country. A little bit about JKJ very quickly. We were founded in 1956. We privately held. When we have a focus nationwide, we have decisions made in 48 states with our clients. And actually, we insured the very first CCRC in Pennsylvania back in 1968. It's from that, just an organic growth mode of working with over 200 now long-term care providers across 20 states. A little bit different in that JKJ has an approach from a service standpoint where we like to focus on those areas of business that are required a high intensive level of service, obviously construction, real estate, manufacturing, distribution, but then health and human services drives about 35% of our annual premium volume. And a lot of that is made up of the, as I mentioned, 250 plus providers in the senior living market. And that's both not-for-profit and for-profit. And we're proud to boast the fact that we are a member of the National Council of Senior Living Brokers, which is a fellowship of brokers around the country regionally who are in touch with each other just on the goings-on of the senior living market. The way that JKJ is made up is a little different, and I'll let Alexandra kind of talk about this briefly if she'd like. And I like to call it outsourced risk management. And when you work with JKJ, you get a team who becomes part of your organization. And the team is made up of the account managers who are doing the day-to-day operations, contract review, all the certificates, things of that nature. We have claims consultants, both clinical and traditional claims consultants who are collaborating with the carriers and us on your behalf, trying to squeeze as much money out of the insurance policies. And then our safety and loss control department, which we like to call the special sauce of our operations. They're the guys who are out performing mock audits, walkthroughs, mystery shopper type visits. Obviously right now it's virtual, sitting in on those safety committee meetings, all dedicated to mitigating the risk that your organization, knowing that we can put that in a better light for the market as you get into your next renewal. So the agenda today, we're going to focus on really quickly just the state of the market pre-COVID. Again, I know I discussed this the last time we had our previous webinar, but I think it's important to bring it up. Just what are those issues that were considerations before coronavirus hit? Then we're going to dive into how the coronavirus has impacted the insurance marketplace. And then thrown in throughout the discussion today, we're just going to have a few insurance renewal tips that will help you just get a little bit better and get a little bit more buttoned up on that next insurance renewal submission that you have. And then we'll save some time for some questions and answers at the end. So what did the marketplace look like before coronavirus took over ours and, more importantly, your lives? Obviously, we know that for the fact that the workforce retention was a big issue for long-term care organizations. Right now, we recall the number of like 50% retention, which meant half the time you were interviewing, it didn't work out. And so there was a lot of time and cost and money and that was being thrown into hiring practices and retaining good staff. We knew that that was a big issue back before coronavirus, and now more than ever, it's even a bigger problem. Elsewhere, you're going to hear about this in the next slide, but we heard about fall claims taking up a significant chunk of dollars out of the insurance carriers and the insured's pockets. So that was an area that we really were starting to focus in. And unfortunately, we knew that there was an uptick in sexual abuse claims, elder abuse claims in the long-term care setting, both because of increased scrutiny by a couple government watchdog agencies, but as well as the plaintiffs' bar related to elder abuse. And what we saw was that underwriters and carriers in the marketplace were already starting to see a lot of market volatility just from a industry perspective, and that wasn't really helping from a renewal standpoint when they were issuing premium quotes and coverage considerations. All of a sudden, the disruption and volatility kind of caused a lot of issues that we knew had to be addressed well before renewal. And again, this was all before coronavirus. So the view from the underwriter's desk pre-COVID was these items that you see here. Keeping our focus in just the senior living setting, obviously, CNA Insurance, which is really the 800-pound gorilla carrier in this marketplace, issued a claims report late last year that provided just a view from where they were seeing things, from where claims dollars were going. And what we learned was that almost half of all the claims dollars being paid out in the senior setting were going back to resident fall claims, averaging a payout of $186,000 per loss. Coming up behind that was pressure ulcers and the like, making up almost 19%. And then the largest type of claim from a total payout average were those elopement claims, with over half of all the claims coming from that assisted living setting. Looking at this slide, the one takeaway that we were really preaching to our clients was, what are you doing to prevent falls? We know that's not going to happen up down to 0 falls, but what are you doing to mitigate fall claims, to make sure that we're addressing fall prevention and ensuring that your protocols are in place and working? These were questions that we knew the underwriters were starting to kind of get a little bit more smart about and drilling into during the renewal process. So this kind of leads us to our first insurance renewal tip. Know and own your loss data and your history. Be aware of where the types of claims are occurring and what's causing them, and most importantly, how you're mitigating the future risk. And the reason we say this is because you need to know your story before the market or the carriers that you're working with know who you are. You need to sell who you are, you need to spin it right, but most importantly, you need to know where your problems are, where your losses are coming from, as well as what you're doing to attack those losses. If you're able to give that information over to the carrier during your renewal process, it will become a whole lot easier for that carrier to paper the file and potentially give you sort of that premium consideration or outside the box coverage that you need during the negotiation process. Alexandra, is there anything you wanted to add on that?
Yeah, I mean, you really can't drive this home enough. At the end of the day, I imagine many of the individuals on this call may have just had their insurance renewal on 7/1, or maybe have it upcoming in the next few months. In this kind of marketplace, and I know, Raph, you're going to touch on this in just a few minutes, you can't just become a piece of paper on an underwriter's desk. There needs to be a story around your organization. And, as much as you can call us an insurance broker, you could almost call us professional storytellers. At the end of the day, our job becomes telling the story of your organization, understanding what your history is, why it's been that way, and then again, most importantly, what is going to be the difference in the future. So I just think it's one of the most critical pieces in terms of managing the insurance renewal is getting the story across.
That's a really good point. Thank you for driving that home. on the next slide here. So really, as I mentioned earlier, the state of the market pre-COVID just didn't look good at all. And the reason was because of the fact that the submissions were up about 25 to 35% across the market. And this overwhelmed the underwriters because the few carriers who were left in this industry to write property and casualty insurance, obviously they were getting a little undermined with renewal submissions, half of which weren't that good, half of which were piecemeal, the other half of which kind of didn't have the information that was needed. And that really caused the market to kind of go upside down on its head and just say, you know what, forget it. We're not going to really be doing much of this anymore. It's from a volume standpoint, things have not looked very good just because of the fact that there's only a couple markets left who are really willing to dig in and write the insurance for senior living providers. Elsewhere, we knew that verdicts across the country against the long-term care setting were on the rise, and underwriters knew that as well. All of a sudden, where you were located started to get a little bit more important, as well as the type of business you were doing. I think I've mentioned this before in prior webinars, but we've talked about what's known as acuity creep, where all of a sudden that IL resident maybe needs AL services, or an AL resident is creeping into the skilled setting. That sort of acuity creep is in the heads of the underwriters as they're going through the risk. And so as a result, we saw that these underwriters started to issue more exclusions, pulling back coverage, adding exclusionary language to policy forms that otherwise weren't there in the past. Elsewhere, they were increasing deductibles, going from a $10,000 deductible claim for property all the way up to $50,000. Or if you're talking about management liability, directors and officers, all of a sudden the minimum deductible out there was $50,000 as opposed to $5,000. All of this was because of the fact that the marketplace had been so turned up on its head, and the waters had been so muddy that they just didn't know what they were doing, and because we don't know what's going on in the next 6, 18, 24 months. So they too, with their misunderstandings and not really knowing of what's going on, they decided to say, you know what, we're just going to throw it into premium ratings. Claims frequencies have also gone up, and that's a big problem. I know I mentioned already that plaintiffs' attorneys have started to specialize more in elder abuse claims, in the elder setting, and the insurance market knows that as well. All of a sudden, we saw that the not-for-profit versus for-profit setting really didn't matter, because the market said, you know what, the exposures and the risk are the same. There's no reason for us to treat it differently. We know that that might not be the case because of the fact that the not-for-profit providers are a little bit more mission-driven and ingrained in the service that they're providing for their clients, that is the residents. But at the same time, the insurance market sees the loss data and they say there's really no differentiation. And then finally, as we all know, the publicly available information out there through Nursing Home Compare, Medicare.gov, and 5-Star is data that's available not just for the adult families or their residents, but it's also there for the underwriters. And we heard that carriers were getting out in front of the game and going right to the website and extracting that information without even discussing with us first. So as a result, this is sort of the talk track that we were pushing our provider clients as a result of all the discussions we've had with the marketplace. They're looking for a delineation of the service model. We know that families are going to sue. And so if we can manage their expectations, get out in front of any potential litigation, that'll drive down claims costs. Again, I keep saying it, but we know that fall-related risks are the biggest driver of claims out there. And so let's get ahead of that and let the carriers know what we're doing to prioritize those fall claims. We also know that there is some resident family trust that needed to be bridged and connected with. And so what forum are you providing for that resident family to ask questions, bring up any concerns? What are you doing to get ahead of potential lawsuits down the road? We already mentioned about workforce and retention. What are you doing to focus on hiring practices? What's your interview process? Do you have integrity testing or behavioral interviewing process? Are you a best place to work? Are you training your leaders properly? Are you burning out the unicorns, those rock stars who are doing everything for you, but at the same time, you're diluting them with so much work that they're just going to say, I'm out of this, forget it. So how are you training your leaders the right way so that we can bring them all up and realize that everybody is a risk manager? And in a day and age where generations are, I think we have maybe 4 generations right now out in the workforce, carriers all of a sudden were asking about what you were doing to foster that attachment between the corporate office and the frontline workers. because now what we've learned is where that maybe Gen Xer or baby boomer really could handle the locker room style coaching of leadership. Now those millennials don't do too well with that approach. And all they're looking for is what's the strategy and vision of the corporate office and how they can be part of that mission. So from a pre-COVID outlook, this was the message that we were providing to our clients. Expect double-digit increases in claims costs, leading to a higher premium rating. Expect carriers to have a change in the appetite. They're either going to get out of the market altogether or maybe even just go to a wholesale channel. Be aware of what we like to call involuntary self-insurance, where deductibles are increased without any negotiation or bargaining power from our end. And be aware of the exclusionary language and those conditions that are now attached to the actual policy as we go through the renewal process. So we knew that the market was going to continue to harden in 2020. We knew carriers were going to be a little bit more selective, but the message was to stay ahead of it by providing them with information. Document, 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 and information is king. And then all of a sudden, this little thing became front and center and took over all of our lives. And this is where Insurance Renewal Tip 2 comes into play. Pressure test your coverage off cycle to confirm the coverage your program is providing is indeed protecting your operations. Make note of any discrepancies and ensure that any necessary coverage is granted or otherwise risk managed. And what we mean by that is, in a time where coronavirus was barreling down the pike back in the early part of this year, we were getting calls from a lot of our clients saying, uh-oh, this is what's coming, am I covered? And this is what you should be doing every year during your renewal process, and really, quite honestly, throughout the policy year with your brokers, constantly discussing with them the claim scenarios and reverse engineering any loss that you can potentially see coming towards the organization, and figuring out either if it's A, covered by the policy or program that you're purchasing, or B, if it's not covered, how are we risk managing that exposure so it's mitigated as best possible. This is the approach that you need to be taking throughout your policy year and not just at the renewal stage. Alexandra, did you have anything to add on this? I apologize. I'm taking up all your time.
No, not at all. I think you're doing great.
All right, thank you. So in this sort of reverse engineering of claims process, we knew that the coronavirus was going to create newfound claims that were going to be barreling down the pike at us. And it's really not the if, it's the when. And keep in mind, no matter what the immunity, no matter what the protocols, no matter what you've done thus far, that is amazing work to keep out coronavirus or mitigate it as best possible, you will still need to litigate and defend any lawsuit or claim that comes into your building. And this is where we need to be aware of the potential claims that are coming down the pike in speaking with carriers now that coronavirus has hit. First one we're reviewing is negligent treatment of residents in allowing the infection to spread. Don't forget that negligent treatment of non-COVID residents is also applicable, and that's going to come along with delays in procedures, inappropriate staffing, communication issues regarding interim care plans. How about the failure to properly notify or communicate with regards to the status of infected residents or inaccurate info that's being provided by the organization? We are aware of the fact that there might be lawsuits that are going to come down the pike to say, you know what, you didn't properly notify us, and we didn't realize of the infection status in your organization, or the numbers that you put out were inaccurate based upon the data that I have elsewhere. So be aware of that and know that documenting now is going to keep you in a best position going forward. And then, of course, lack of preparation claims. So failure to prepare or effectively manage the outbreak. And this is regarding staffing and equipment shortages, ineffective chain of command protocols, failure to lock down facilities outside from visitors. We've already seen certain members get government treatment, obviously from the White House on down, and senior living and senior housing providers are really getting the redheaded stepchild treatment right now. But again, documenting what you're doing presently and continually documenting that process and making sure that you have all of the information ready now will ensure that you're ready to litigate and defend your claim should it come up down the road. Elsewhere, we knew that there's going to be failure to adhere to CDC guidelines claims alleging that you did not uphold your requirements that the CDC was issuing down. Even we know for a fact that the CDC was coming out with almost daily updates that were against one another day by day? How about failure to prevent asymptomatic workers from spreading the virus knowingly? Or how about privacy claims? So we call these atypical claims, but privacy claims regarding communication and inadvertent release of patient information. So these are sort of the things that came to our mind as far as the issues that we knew might come down the pike once the dust had settled and the plaintiff's bar is ready to fire their gun at the senior living setting. So now I want to switch gears just a little bit. Now that we've talked about the privacy claims in particular, this leads us to an area that might get often overlooked, but certainly is not going to be less important. And that's where Alexandra is going to take over, since she is our cyber practice leader. And I will pass the slides on to her.
Thanks, Raf. One thing I will add about those potential claims you just talked about is an area of confusion is, sometimes what gets put on a resident death certificate might not actually match the cause of death when it comes to COVID. I understand, from several of my clients, they feel that medical examiners have gotten a little bit trigger happy with issuing COVID as the cause of death, which is obviously opening us up to more potential litigation. So if you have those types of scenarios, that's really where you should talk to your broker and your insurance provider, and ultimately you may want to be reporting those things just as a notice only. Hey, this person is officially on paper as having passed away from this disease, and in the event a lawsuit comes out from this later, we want it on file that we've notified you in order to prevent any potential coverage issues down the line. So that said, I'll spend the next about 10 minutes talking about cyber. And when we're talking about insurance, I'll be honest, I kind of felt like the Grim Reaper these past, 4 to 6 months, because everything just seems negative, right? Prices are going up, coverage is being limited, and my renewal conversations are difficult ones at times because of that, because of how the insurance market is responding to these things. So what I promise you in these next couple of slides is, we will talk about the exposure and the risk, but most importantly, I want to leave you with some thoughts about what you can do about it, rather than just feeling kind of helpless and the world is falling down and everything's becoming unaffordable. So when we're talking about cyber, what do we mean? Really, what are the biggest threats that probably come to mind for you? And this is still just the same as it was both before and after the coronavirus surfaced. So ransomware attacks, really big in the healthcare space. There was some talk that when the coronavirus kind of was first taking hold, that hackers were trying to be ethical and leave healthcare organizations alone, but that's quickly dissipated, and they're really under the gun here in terms of being the target of attacks. And that's because they know if your systems are down, you're not really in a position to have a lot of negotiating power. You have to be up and running in order to serve your residents and serve your community. So ransomware attacks where you're being held ransom, your systems have been hijacked, are really a big time threat. Outside of that, and I have these conversations every other week, we've got these social engineering, these phishing attacks that ultimately lead to either a privacy breach, so some kind of theft or access of private information, we're violating HIPAA potentially, or theft of money, right, where we get duped into transferring money to somebody or changing an ACH transfer to somebody that we thought was somebody else, somebody purporting to be a third party that they are not. So fortunately, cyber insurance was designed to respond to these situations. This is exactly what having a cyber insurance policy will do for you. It'll handle these types of situations. So what's the state of the insurance market when it comes to cyber? I actually have relatively good news on this. Most of the renewals we're seeing so far in 2020 have been flat in terms of a rate standpoint. Typically, cyber gets rated on your company revenue, and so the rate per revenue have remained pretty consistently flat, maybe some slight increases here and there. That's worth knowing because if you're considering buying higher limits, say you only have that $1 million policy right now and you're not sure if that's really adequate for your exposure, this is the time to be considering higher limits. What we are seeing is a continued increase in the frequency and severity of claims, especially in this new COVID-19 world, right? There's a lot of clickbait going around. And so as a result, there's an uptick in the number of claims. And of course, the more claims you have, frequency tends to breed severity, the more severe they're becoming in terms of cost. But ultimately, this is really driven by regulation. What are the government entities requiring? From a regulatory standpoint, you'll see biometric data is now being classified as private information. So if you have, password, or if you have fingerprint protection or any kind of biometric scanning for your employees to access your facility or access your systems, those things are now being protected by privacy laws. You've got CCPA, that's the California Consumer Protection Act, really broad scope act, started to enforce more requirements around, having a cyber response plan, having a dedicated information security officer, the minimum requirements you need to do, but then most importantly, how you have to handle somebody's private information. So how you store it, where you store it, how you notify them that you stored it, and then most importantly, if someone wants to be forgotten, how you go about removing and eliminating that information from being in your system. It's just an example of, the types of laws that are being passed out there, because as you start to see it, more severe in certain states, you can certainly expect one day those types of laws are going to apply in yours. What we are seeing, that although prices are fortunately not skyrocketing, you are starting to see more security requirements from the insurance carriers, especially if you've had a past claim. So the big one that I'm starting to see now is a requirement that you deploy multi-factor authentication. I know that's a little bit cut off at the bottom there. So you'll sometimes hear that referred to as two-factor authentication, multi-factor. So authenticating and validating your credentials in more than one way. So beyond just typing in a password, you get that text or a separate email to confirm your identity. Now, this can be challenging when it comes to our senior living facilities because not all access is the same. So how access looks for your corporate and back office employees might be different than what's happening for your nurses on the floor as they access the EMRs. So because of that, it's worth having that conversation and understanding how that gets deployed. Okay, next slide, please. So what are some things you should be thinking about, especially in this kind of new world we're living in? I hate the cliche of saying it, but it is truly the new reality. So in a world where there is increased remote working, and you may have some or a good portion of your employees remote accessing your network, are you now permitting personal devices to be connected? Whereas before, maybe not. Now we're allowing employees to use their own personal laptops because they didn't have one, or their personal phones because we had not issued a company phone. That needs to be considered, because what is your control over the security of that device? And is that device considered part of your network and covered by your cyber insurance program? Cyber insurance can be written so differently that it's possible, the way it's written, that a personal device of an employee is not considered part of your network. And if that were to get breached and cause a breach of your network, it could not have coverage. The second bullet there, I think it's so important for me to say. I realize I'm talking to you guys about cyber amidst a truly chaotic time in the world. There's a lot of pressing issues that you guys are managing day in and day out. So it's worth asking yourself, have you stopped or slowed some of your employee training as a result of it? Now that things have started to resume operations in different ways, we're creating new policies and procedures, new ways of going about our lives and our company operations. It's something to make sure that you're considering. How are we continuing or not to train our employees when it comes to data privacy and managing data? And I'll come back to that point in a little bit. Are your corporate and back office employees working remotely? And if so, similar concept here. Whether or not they're using a personal device, a company device, this is getting a little technical, but do they have proper remote access protocols? Or do you have a virtual private network set up? Are you requiring that anybody accessing your systems remotely has to go through multi-factor authentication? If you are going to deploy multi-factor authentication and you don't have it already, that is a great place to start for any type of remote access to your organization. Do you have an incident response plan in place for a cyber incident? So this really touches on broader, business continuity, disaster recovery planning. Have you put pen to paper and thought about, okay, the really unfortunate has happened. We can't access our system. We're the victim of ransomware, or we believe somebody may have gotten into our emails and now they're able to get into private information. What are we going to do? Now, your first thought might be, I'm going to call IT, and that's pretty natural and standard reaction and something you should do, but that should also include notifying the insurance company if you have a cyber insurance program in place, because they're going to help you line up those resources in order to appropriately address the incident. If your system goes down and you become victim to ransomware, do you have off-site backups available to engage? So that really ties into the sub-question there. If you find that you are the victim of a ransomware attack, do you pay the ransom? This is a really hot button issue. A lot of people take the perspective of, I will not negotiate with terrorists. I would not pay the ransom. The reality is, and of course the FBI would prefer you not pay the ransom. We don't want to continue to fund these criminals and terrorist organizations. The reality is that you may not be in a position to negotiate. If you don't have adequate off-site backups, so backups that are truly separate from your system, not also subject to the ransomware attack, that you can roll up and deploy quickly, you may be in a position where it's more affordable to pay the ransom, get your system back, and apply some corrective action than it would be to rebuild or reboot. In light of this new world, have you deployed telemedicine? And are you starting to use video conferencing more, just like GoToMeeting? GoToMeeting is one of the more secure systems out there, but I'm sure many of you heard in the news, Zoom was really under fire for a while for not having adequate security in place. That's going to start to possibly blur the lines of some privacy issues if there's any potential reason to think that someone's hacked, it's called Zoom bombing. Anybody has Zoom bombed your video conference. And then again, my last point there I mentioned before is cybersecurity and data privacy part of your employee training and onboarding. In this world that we live in, and not post-COVID, but truly in this world where technology is paramount to operations, we need to make sure that cybersecurity and data privacy is understood as part of every single employee's job responsibility. We all have a duty and responsibility to protect the data of our organizations, and it needs to be communicated in that way, starting from day one, and then reinforced with training throughout.
Alexander, you put up a really good point. In the time where cyber liability insurance is still considered a discretionary purchase from the insureds, it really is the coverage that is the newest gotta have coverage. Property, work comp, auto, liability. Yes, you gotta have those. Cyber liability, where a couple years ago, about 50% of the folks out there said, yeah, you know what, no one's gonna hack a not-profit like ours. Now all of a sudden we've seen just a huge uptick in that coverage being purchased. And to Alexandra's point, it's such a soft market still, and there's still a lot of bells and whistles that you can add on to that cyber liability coverage that'll ensure that your new exposures, telehealth, bodily injury as a result of a cyber event, things of that nature are covered by your insurance program. So Alexandra, going into just the sort of risk management considerations from a cyber standpoint, what are some of the questions that we're asking and kind of focusing on for our folks?
Yeah, so right in this new world, this post-COVID world, not only do we have to wash our hands, we need to really watch our clicks. So I go back to the employee training piece. If there's two things I could tell you to do, most importantly, to manage your cyber risk, one is preventative and one is reactive. From a preventative standpoint, If you look at most breaches, it's typically as a result of an individual doing something they shouldn't have done, clicking on something they shouldn't have clicked, putting their credentials in something they shouldn't have done, sharing information that they shouldn't have shared, sending a financial transaction they shouldn't have sent, right? So it really comes down to the individual. Employees are the gatekeepers to your organization. So make sure, and this is where I say, in a world of competing priorities, it's still worth reinforcing to your employees to be very careful of what they click on. With all these different newsworthy events going on in 2020 especially, there's a lot of hack type emails and clickbait out there that are going to result in a ransomware or another type of attack on your system. Another thing you can do is actually communicate with your employees and set expectations for how they're going to hear from IT. A lot of times these hackers know that you've got people working remotely, it's new, it's different, and you're still adjusting. And so they will purport to be the IT team of your organization and steal that individual's credentials. So make sure people know how they can expect to hear from your legitimate IT team so that they're not taken off guard and possibly fooled or duped by someone else. One of the big things that unfortunately I see so often is really the financial transactions, right? Where we end up sending a payment or money to somebody who is not who they said they were. Whether we're changing an employee's payroll information and suddenly their paycheck's going to a different account, or paying a vendor. Make sure that you've got a verification and approval process in place to ensure the legitimacy of any transaction. I realize, there could be a lot of transactions on a given day, so maybe you pick a threshold, but be cautious with the thresholds you pick, because even if you pick, anything over 100,000 is where we're going to require 2 people to authorize it. Well, if you start getting duped by somebody for a $75,000 transaction and they do that 15 times over before you catch it, suddenly that dollar amount was far larger than you originally anticipated. Password requirements. This is not the time to suddenly stop requiring more strict or periodic password changes. I realize, again, we try to make it easy for people in this time, but this is not the time to get lax on that. We talked about remote connectivity. And my second biggest thing that I said you should do, if nothing else, is have an incident response plan in place. If this could be a one-page document if you need it, just to identify who are you going to call and who's going to be involved in the decisions that get made when it comes to managing a cyber incident. And most importantly, print that out. If your system is hijacked and you can't access it, we need to have those phone numbers printed out somewhere so you can actually reference it. Many of these hack attacks are actually as a result of unpatched systems, and we talked about the importance of having good data backups is really the best defense for ransomware. Being able to say, we don't need to deal with you, Mr. Attacker. We can actually back up and recover from our own data. Next slide, please. And lastly, ultimately, cyber risk management, when you look at it, it's a balance, right? You have to balance cost, convenience, with security. I realize that, there's the ideal world that you could go broke buying cyber security products. And then, of course, it has to be something that fits into the convenience of your operations. It's got to be functional. So it is going to be a constant balance. But ultimately, your goal should be to reach this state of what's called cyber resilience. Not the state where you can suddenly prevent anything and everything from happening, because it's not realistic. But actually more so that if something's happening, you can identify it, respond to it, and recover from it. And ultimately, what's going to happen if you find yourself in court? You're going to be held to a reasonableness standard. So you can ask yourself, should I be doing penetration testing and vulnerability assessments? Well, what would I reasonably expect of a similar organization? What would I expect that they have in place in order to prevent a cyber incident? And that's really a moving target, but that's what you should be considering when evaluating your cyber. And with that, I went a little bit over there, so I will wrap that up.
No, I really appreciate Alexandria taking the time to talk about this, because I know for a fact that we were looking forward to presenting a full-blown cyber session at the Leading Edge Virginia conference this year. And so I'm glad you're able to offer these words up. Now more than ever, it's a time that we need to focus on the non-coronavirus risks and exposures as well. So it's our job to consistently remind our provider clients of these issues, of what to be aware of and what they can do to stay ahead. So thanks for doing that. I really appreciate that. Moving on to workforce. These are one of the main exposures that we saw from coronavirus affecting things from just a workforce setting for the organizations. As the healthcare landscape quickly evolved just to keep pace with the spread of the virus, and after speaking with a number of insurance carrier underwriters in that long-term care space, these were some of the main areas within workforce that were probably going to be impacted or develop as a result of the pandemic. First being that reduction in staff. And typically we see these in a hospital setting, but the carriers know that in a nursing home setting, providers are exacerbated by short staffing, overworked staff, covering shortages, as caregivers are suspected of having infection and staying at home. We're aware of the fact that this can negatively impact the quality of care and potentially lead to resident injuries. And the carriers anticipate the exposure to lead to an uptick in claims of negligence and malpractice. So for us, we're asking our provider clients, what are you doing from a workforce standpoint to handle reduction in staff so that we can get to the carrier before they ask the question. Elsewhere, we knew that certain staff were going to be reinstated. There's some inactive staff who were going to be being pulled back. And so we wanted to make sure that we were reviewing their certificates, making sure that they were in line and properly licensed before they were starting to put hands on residents again. And then while we know that the stay-at-home orders and no visitation policies have affected a lot of providers from a volunteer standpoint, it's be wise for you to now check your policy to ensure that the definition of insured includes volunteers so that they are covered should they need to be. These are sort of the areas from a workforce standpoint that were really, it would be a big issue for providers going forward. From a work comp standpoint, as the pandemic continues to develop, compensability is going to be an issue. And while generally requires that an illness be occupational in nature, meaning that it arises in and out of the course and scope of employment and is proven to be as a result of workplace exposure and is peculiar to that employee's work, we also knew that as the COVID-19 virus continued to spread, it was going to become tough to determine whether that employee has actually contracted the illness in the workplace. So we knew that that sort of compensability argument was going to be a hurdle that we needed to get through. I'm going to take a sidebar real quick and just talk about sort of statutory presumption. And when I say compensability, we've obviously read about a number of states and starting to take the initiative to require or make any COVID-19 related work comp claim to be essentially a strict liability claim, meaning that the healthcare worker who provides that claim or issues that claim has any ability to put it in, and the provider has no ability to defend such claim. While it sounds good that we're providing the support for the folks who are issuing the work comp claim, we also know for a fact that everybody has sort of an experience modification factor, and I do not know why these are doing this right now. 1 second, there we go. So everyone has an experience modification factor. And the issue we have is that when you are required to cover a COVID-19 claim, no matter what, that COVID-19 claim is going to go onto your loss data. And that loss data creates an experience modification factor, which is a multiplier for the premium you pay from a work comp standpoint. So we want to make sure that providers are aware of the implications of simply allowing COVID claims to come through, and to make sure that they defend properly. And if they have any inclination that the virus came from some non-healthcare setting, to raise that defense during the work comp proceeding. So when COVID-19 hit, we immediately deployed our resources out to the carriers, the insurance market players in the long-term care space. And this was sort of the message that we were getting back from them. And it was all over the place. Not writing new business until September. No new business for the time being. Yes, we're writing business, but here's a supplemental application, or here's a communicable disease exclusion. And now that we're past the July 1 renewal stage, which July 1, as many of you know, is probably the second biggest insurance renewal day of the year outside of January 1st, it's going to be interesting to see how carriers are going to react to either the doors opening or are the doors going to be closed for another 6 months. I mean, even as of this morning, I've gotten multiple emails from various carriers, one of whom said, sorry, we're still not open, and the other said, we're wide open for business. That is just extreme volatility that we just cannot manage properly because of the fact that the markets really aren't having a consistent message on what direction they're going. And this leads us into renewal tip number 3. Foster your relationships with the carriers who are covering your insurance program and build a rapport and create a collaborative strategy that involves both you, the insured, and the carriers to address and to mitigate exposures. And the hashtag there is loss ratio. And what we mean by that is go beyond just transacting with your carriers right now. Tap into your carrier contacts and resources. Leverage your broker to reach out to those carriers and get them involved in the philanthropy that you're doing for the organization. In those golf outings, they're not happening much often now, but involving them in those fundraisers. Keep advocating to them and letting them know what's going on, and we'll talk about this in a little bit, but talk about what you're doing from just a service standpoint for your people, and get that carrier involved or carriers involved beyond just placing the coverage. Alexandra, did you have anything to add on that? I'm gonna guess no. There we go. So
I was still on mute. Keep going.
no worries. No worries at all. So going down the line of just sort of continued muddy water, as opposed to, as we're dealing with the various markets who are still writing this business in senior living. Chubb Insurance, for example, once the coronavirus hit, they issued this exclusionary endorsement. And as you can see, this is a total and absolute exclusion for any coronavirus. And you can see right there, insurance does not apply to any liability arising out of, related in any way, actual, alleged, blah, blah, blah. Bottom line is, let's be clear, we are not paying for a coronavirus related loss. All right, that's Chubb. MedPro, another carrier in senior living. They issued this communicable disease injury exclusion. And all of a sudden we found that their renewal quotes started to include language like this, telling us that they too had no idea of what was going on going forward. They didn't want to underwrite it. They didn't want to include it in their premium rating. And so we're going to just have an absolute total exclusion. Ironshore, on the other hand, was allowing pandemic related coverage to be continued in the renewal process. So here they issued a supplemental application related to COVID-19. And while we all know that supplemental applications can be the bane of our existence, we sort of used this as a game plan outline as far as what we were doing for mitigating the coronavirus in our building. How many employees have you had confirmed diagnosis? Are you limiting and screening visitors? Are you involving the public health department? What protocols are in place? So instead of using this as sort of another waste of time that we have to fill out an application, let's create this list as sort of a checklist for us going forward to make sure that we're staying ahead of the insurance carriers who are asking these questions. And the reason is because of the fact that we know the plaintiff's bar is already starting to craft the story. They are mobilizing. And I know that we have a number of other attorneys who are going to be talking later this month in this series about sort of the legal implications. But just know, the plaintiff's bar is already starting to mobilize. They're going to be working on emotional manipulation, playing on public anger and fear, capitalizing on feelings of powerlessness and economic uncertainty. Morgan & Morgan has already started issuing what's called a medical malpractice checklist. Some attorneys are now saying that we're the coronavirus lawyers. Just know that they are mobilizing. And so what are we doing right now to assist with our clients to build that defense? We know that any institution with a higher than average mortality rate or a family that's starting to look like a problem is going to require us to start thinking about a defense now. So the first thing we're saying to do is hold on to that critical information. You heard Alexandra talk about this already. Even if you have to do with that print to PDF feature, constantly print out those guidelines, the directives, the things that you're doing that are requiring you to act, and hold on to those records. Make sure that you have all of the information ready when that lawsuit gets sent to your organization. Most importantly, we want to make sure that you're establishing a timeline. When were residents or patients first diagnosed and treated? Who was notified? Is there an emergency preparedness plan? What efforts were taken to make sure that you had proper PPE? And if you didn't, why was that the case? What information did you receive from governmental entities in an effort to comply with those rules? What staff changes occurred during the pandemic, and what are your infection control practices, or what complaints have you gotten from family or residents? From a record keeping standpoint, we want to make sure that you're holding on to all the information that is covering the treatment of those COVID-19 infected residents. What policies do you have to manage visitors, limit access? What do you have with regards to internal and external communications, including those with your residents and the staff, but also with local media? And what are your infection control policies, and what are you doing to stay ahead of that? All of this information, I'm sure you're doing, and I'm sure you're doing a great job, but let's make sure that we're documenting all of these efforts and alerting your carriers now so that they know all of the good things that you're doing to make sure that your risk is mitigated as best possible. I kind of talked about a little bit engaging your carriers in the story. And this is where we want to say, own your story. A lot of us now on LinkedIn and Facebook and Twitter, we are all advocating as best possible for the senior living industry and trying to highlight all of the good things that are being done right now so that the general population knows that, again, we should not be that redheaded stepchild that's constantly having the finger pointed at us as the reason for the coronavirus spread. So here we're saying personalize your organization, highlight the mission statement of your organization, and document and highlight those success stories about, say, the 98-year-old COVID resident who has fought through it and now is COVID-free. Those stories need to resonate out in your general locale so that the message is sustained throughout this pandemic. But most importantly, make sure that you're letting your carriers know of all the things that you're doing so that you can create that bridge, that relationship between you and the folks who are financially protecting you. And this leads you down to the final insurance renewal tip, number 4. Have all documentation ready to tell the story to the insurance market well before your policy expiration. Now is not the time to hand your renewal at the 11th hour. And what I mean by this is, even if you have a July 1 renewal and you're literally coming up for air right now, I would say the best time to get started is probably within the next month or two. And I'm not even kidding. Start to build that file now so that you're ready well before your next renewal, because we know for the fact that the availability of markets out there are going to dwindle. And so for the few who are left, we're going to want to make sure that they know who we are already, and it's not an intro meeting when we're getting that renewal quote. Alexandra, did you have anything to add on that? I think she's still.
No, I think you've got it completely covered. I mean, it's getting the story, putting it together, you know, and articulating that to these underwriters. That's really what's going to make or break these renewals.
So here again, this is just sort of a boiled down slide of just all the insurance renewal tips, and I'll go through them very, very quickly. Again, know and own your loss data. Know where your losses are coming from, because that's the first thing that the carriers are going to ask. What's their loss experience? Pressure test your coverage. Your program is in place right now, so now is the time to go back to your broker or to your risk manager or whoever you're working with and say, here is a claim or a claim scenario or a loss that I could contemplate happening, and I want to make sure it's covered, or if it's not, what are we doing? Continue to foster relationships with the carriers. And I mean beyond the insurance aspects. Find out how many kids they have. Find out what college they went to, and start to build the relationship with those carrier partners, because we know that the availability of markets out in the senior living space are going few and far between right now. And most importantly, document. Have all your documentation ready to tell the story to the insurance market. So in summary, it was bad before. COVID-19 didn't make it any easier, and that's the current landscape that we have. Remember the fall risks. Remember the abuse claims. 5 stars out there already. You add that to the COVID-19 exposures, and that's the hard market that we're in right now. That being said, it's not impossible to get the coverage that you need or even the price that you need right now, and it's because of the fact that we're really leveraging the fact that we have those relationships with those carriers. Do not simply accept the involuntary self-insurance quotes that come back to you, and realize that when you get a quote, you are still able to negotiate for both price and coverage as best possible. And information is king. The more info that you can provide to your carrier partners right now will make it better to have that discussion about the story that is your organization. I'm now going to leave it open for any questions or answers again, but let me thank everybody for allowing us the opportunity to present today.
Are there any questions or comments or thoughts by anybody? This has been pretty good, really good. Raphael and Alexandra.
Yeah, we know insurance is not the most glamorous thing that people want to talk about, no matter what the time. So I understand the questions.
I still think it's good. There was.
I'll just add one. I'm sorry. Go ahead.
Go ahead. No, go ahead.
I was just going to add one thing about, when we talked through all those COVID-19 or communicable disease exclusions, why those really matter on the liability program. So, I think for the most part, many of you are probably in a good position to have good defensibility, right? You're following CDC guidelines. You're truly doing the best you can given all of the circumstances. And so in a court of law, if somebody says, hey, my loved one passed away and you didn't prevent this, how much is that really going to hold up? The challenge is really the defense cost. When you have those exclusions, you lose the coverage for covering your legal defense. And that's why it's critically important to try to work around those and try to maintain that coverage as long as possible.
And Alexandra, with regard to that, if you have somebody do, a third-party risk assessment for cybersecurity, does that help out with your premiums?
Yeah, great question. I get that one probably, I don't know, twice a month at this point. Hey, if we do X, Y, and Z, does that mean we get a discount? The answer, unfortunately, is no. There's no direct correlation that because you did this percent comes off of your premium. However, much in the same concept as we're talking about telling a story, somebody needs to articulate to the cyber insurance carrier, hey, we are doing these things and we think this makes us less risky than Joe Schmo next door. These are what we're doing. This is what we believe is going to prevent an attack. The employee training we're doing, we get an assessment once a year, X, Y, and Z. Putting kind of pen to paper on that and articulating that to the insurance marketplace is going to get you more favorable premiums than it would somebody else who hasn't had that conversation. Whether or not they're doing it, if they haven't had the conversation, they may end up paying more than the person who did.
All right, thank you. Well, I don't see any other questions that have come in. If not, then again, I say thank you to Raphael and Alexandra for giving us such a informative webinar. I can see the correlation between legal stuff and insurance stuff, so I hope everybody got something good out of it at least. I always say if you can get at least 1 point from a webinar, then we've done our job.
Well, thank you very much. And really, on behalf of everyone at JKJ, let me thank all of the providers out there who are doing the real work. We're here for you, and we'll continue to support you in any way we can. And thanks again to the Leading Age Virginia folks, especially you, Paula, for setting this series up.